All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here as we approach that noon hour in Central Time. Let's see if it's going to be a noon balloon or a noon swoon, right? Let's take a look at these markets. We'll start with corn and see what these markets are doing, because ultimately that's going to be your money, right? And we've got a lower board now, or a half-cent lower in July corn, to 443, 3 cents off the low of the day, 5 1/4 cents off the high. If we go out to the new crop D's, that's just up 1 tick, 1/4 cent. 463 is last there. And we're going to say that's 3 1/4 cents from the low of the day and about 3 1/2 cents from the high. That's right, smack dab in the middle. That's corn for you. Let's take a look and see what soybeans have for us. Soybeans have got a lower board, about 3 1/2 cents lower across the board, but we actually gain, the losses gain as we go out, the diverge. Look, so July, that's down 3 3/4 cents to 11.80 3/4. That's 4 3/4 cents off the low of the day there and about 9 cents off the highs. But as you go out to, say, even Nove, that's down 8 1/4 cents to 11.55 1/2. So that's 2 ticks, half cent off the low of the day there. We're well off the highs by about 12 cents. So that's what's happening in beans. The deferred's getting hurt a little bit more than the front months are. How about wheat in Chicago, Chicago wheat? Well, that's down 12 cents to 6.60 3/4. And again, that's about 2 1/2 cents off the low of the day, well off the high by 21 cents, or 20 1/2 cents to be exact. Dees, that's down 10 1/2 cents to 7.08, and that's 2 1/2 cents from the low, 18 1/4 cents from the high. How about that? All right. That's Chicago wheat. Anything different in the hard red when we go to Kansas City? Let's take a look. Kansas City is down 8 1/4 cents. 6.91 3/4 is last, 3 3/4 cents off of the low of the day. Well off the highs by, I'm going to call that 14 cents, 13 1/2 cents. Dees, that's going to be 8 cents lower. Dees hard red wheat in Kansas City, 7.24 3/4 is the price. That's 3 3/4 cents off the low of the day, and about 14 cents, 13 1/4 cents off the high. All right, that's what's happening in the hard red. Moving over to the spring wheat in Minneapolis, that's down 8 cents in July. 7.25 3/4 is last, and that's about 2 1/2 cents off the low there. Well off the high by about 10 3/4 cents. Dees, that's down 5 1/2 cents to 7.53 3/4. That's 4 1/4 cents off the low of the day there, folks, and we're going to be about 12 cents off the high. That's spring wheat, Minneapolis. Let's take a look at cotton. We'll get to our next guest analyst. Cotton's up 26 points to 73.41. And we've got a Dees board. That's the new crop, down 31 points to 73.04. All right, let's bring him in. That's going to be we've got Tommy Grisafi. He's with Advanced Trading, and I think he's at Valpo. There he is. All right, Tommy. What are your thoughts on today's action? What's going on?
The American farmer's awesome. We grow a lot of grain with rain, and we flood out some acres too. It's really, really, really hard to say the crop's ruined on June 4th. So here's my little 1-minute speech. If you're holding a lot of old crop, and you got nothing sold for new crop, and you have them forward sold 25, and you're having a hard time getting the crop in, you're really upset. That is just a terrible situation to be in. If you sold all your old crop, you're hedged and have great crop insurance on 24, maybe there's some production problems, but you're covered through insurance or risk management, you're okay. And you forward sold 25, you don't mind a down day. So the down day hurts by, are you long 1 corn crop, 2, or 3? And if you're long 4 corn crops, well, then I don't know that you and I actually helped educate people that much. So for whatever reason, people are really bullish corn. I think they're really bullish corn because 2 years ago they sold $8 corn, but that has nothing to do with this year. Markets have a funny sense of humor. And in the end, we had a wonderful short covering rally, and then the party got taken over for a few more weeks by wheat. But in the end, the fundamentals are taking control. Supply and demand, my friend, is what's happening here in the markets today.
Yeah, it's brutal. So good. That's a good point. I mean, take weather out of it, all right? I mean, that's weather's. Are we going to have to wait till the end of June maybe to get something to spur the market higher? I mean, what would be there to make these markets move higher if we take weather out of the situation? Because I don't like to hang my entire marketing plan on weather.
Well, can I switch it to outside markets, because I know you're an expert on that? Yesterday, crude oil was down $3, and then a little bit ago it was down $1.50. You're seeing gold down 25, silver down $1.20, seeing Dr. Copper well off the highs. And I'm sure you're covering all these things and more on Scott the Cow Guy. In the last 3-4 days, we've seen interest rates really calm down. I'm going to say something before we go on commercial break. When I look at the outside markets, they're pricing in something scary to happen, whether that be political tension from what just happened last week or geopolitical tension, but the outside markets look scared of the real world. Back to you, Scotty.
You're exactly right. They are definitely jittery, and we've moved into a scenario where bad news is now bad news. Nobody's trying to spin it, and it looks as though that people are slowly but surely waking up to the fact that this economy is not as good as they thought it was. The greatest stat I think of last week, Tommy, was only 10% of the people own 93% of the stocks. I mean, that means 90% of America has not enjoyed this stock market rally. So
Correct, right.
that's a disaster. The bottom 50%, only 1% of the stocks they own. And if you take a look at total net worth, they only own 2.6% of it. So we're in a world of hurt. And I think that these numbers slowly but surely coming out after prolonged higher interest rates than a lot of people thought definitely has a lot of these markets on their back feet because they just don't know what to do. So we're going to go away. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading. He's in Valparaiso, Indiana. We'll be right back after this. All right, welcome back. Let's talk some livestock, right? This is where we do that. And let's take a look and see what we've got going on live cattle. That'll bring up that board, and we'll see a little bit of a gain here. 65 cents better, 182.67 in June live cattle. I guess the positive part of me would say that that's 32 cents away from the high, but we've only had an 85-cent range, so you can't get too excited, can you? 42 cents better in October to 181.32, and that's still just about 90 cents off the high of the day there. So not a lot going on. We're up anywhere between 17 to, say, 65 cents across the board. That's live cattle. Really not doing very much. Feeders, again, you could say the same there here. 40 cents better in the August to 256.60. 57 cents from the low. So we're closer to the low than the high, that's for sure. And we're off the high by about $1.50. And if you look at, say, October, that's up 22 cents to 259.07. Not a lot going on there either, folks. That's feeders. Lean hogs, they were under some pressure, and they still are 82 cents lower in June. 92.82 is last, and that's 40 cents off the low of the day. You go out to the deferreds a little bit. October is down $1.32 to 80.82 there, and that too is also 40 cents off the low of the day out there, and we've had about $1.60 range. So that's what's happening in lean hogs. Let's bring him back in to see if he's got anything to say about these livestock prices. We've got 60 seconds saved for you. Tommy, what's up?
Real quick, speed round. I want to go back to wheat real quick. Wheat is not acting well. Wheat led this whole market up. It is, I could almost say it looks wheat hit a top, but I could be wrong, and that's what makes a market a market. And oftentimes I am. Cattle, the difference between the cash market and the futures is pretty wide in that June. Keep an eye on that. Could be some fireworks here as that June expires. As far as pork, I'd like to see prices higher. Pork producer gets a chance to make a profit in this quarter. They had those higher prices a month or two ago when I was filling in for you down there. If you don't sell those rallies, you get today's prices. Back to you, my friend.
I mean, that's pretty well summed up. It's going to be interesting to see. Again, you're right to bring up those outside markets, because if we do see the consumers start to falter, we see the equities sell off real hard, we might get those rate cuts everybody's been talking about, but for all the wrong reasons, which is really what the big story will be there. But we got a lot in front of us. They've got this economy taped together with duct tape and Band-Aids. We'll see how long it can last. Thank you very much, Tommy. Tommy Grisafi, he's in Valparaiso, Indiana. Advanced Trading is his firm. They're a friend of the show.
I got to tell you, he looks great. I mean, he's got like a whole new setup there or something.
It's because he's happy.
What's
That's the difference.